Broadcast is now starting. All attendees are in listen-only mode.
Back here, everybody. Looks like people are coming back. Sorry about that. We had some problems there, obviously. Can you hear me okay now? Let me just get that. Get a sense there that you can hear me all right. Good. Reopen this. Okay, all right, so let's see. We said we can't do this, but we can move it down here. Everybody can see the volume okay now? For some reason that didn't get connected or locked in very well. All right, I think looks like everybody's back now. So we'll start. So this is about looking at bottoms, reading bottoms, going bar by bar, and not so much, looking about specific indications or anything like that, but doing it the way I do it, which is taking a look at it logically and trying to figure out what might be going on in the market and why that might be happening. So what do we notice here at the right edge of the chart? It's not going to let me do this, is it? Damn this thing. Okay, fine. What is it? What does it show over here at the right edge of the chart? Do you all see? Lower highs. Anybody else? Well, if I'm looking at this, I'm noticing that it broke down through the lows over here, and it did so on wide spreads coming down, and volume is increasing to the downside as we break down through here. Okay, tells me that the market is weak. Yeah, I had problems too. I don't know if it's internet or if it is what it is. If I'm having troubles here all over the place with GoToWebinar, the software that we use here. I can't draw for some reason. I don't know why that is. I can put arrows in. Okay, so right here we're breaking down through the, and we're just restarting anyway, Janet, so sorry about that. We're breaking down through here, and we're getting an increase in volume. As we come down here, well, you can't really see it, can you? Let me see if I can just let me just take a moment here and see if I can figure out how to do this. I can't do it that way. View. Come on, I don't want picture tools. Why is this doing this? Well, okay, we're just gonna, I don't know what to do here. We're just gonna have to go with it this way. Okay, so we're breaking down here. And what do we notice about the volume as we come down over here? And what does that mean to us? As we're breaking down here, going underneath the support, what are we seeing here in the price bars and in the volume? Yeah, increasing volume, right? Right, and that means that supply is in control, that sellers are operating in force in the market, doesn't it? What about here? What do you see here? And what might this mean to us? Yeah, I'm seeing very high volume coming in, right? It's the highest volume on the chart that we see here. I don't know that it's stopping volume. I couldn't say that at this point. What I would say is that it doesn't look much different to me than this bar, except that we have even more selling coming in. And I'd be looking at it from the close here down and thinking, this really has dropped quite a bit, and there's quite a bit of supply there. It's abnormal volume, maybe, but I think that would probably be a little hard to read real time. I would still consider this to be pretty bearish here, and the likelihood being that we would go lower, which indeed we obviously do, but to me it looks more bearish in here. And I couldn't really say, I think, you know, the high volume might mean that some buyers were trying to come in, but gee, they really closed it down here on the lows on this bar, right? So I can't really say that that's stopping volume. At least I can't say that in that way. I don't see really any indication of that. What about the next bar? What does that tell us here? What's going on here, do you think? And remember, I'm just reading this logically, bar by bar here. I'm not trying to do anything more than that with it. What would we say about this next bar right here and the volume that accompanies it? I don't, people are saying some buying came in. I don't really know that buying came in here. What I see is that we make a lower low and a lower close. We didn't rally very much. We rallied maybe midday, and then in the end of the day, they closed it down, closed it near its lows. What we don't see, though, is the progress being made coming down here. And we don't see the high volume, although volume is still fairly high here. You know, it's kind of dwarfed a bit by this bar here, but we're still getting pretty high volume. What it suggests, though, is that it may be that buying is coming in, or it could be that they've taken this market down like this now, the sellers have, for quite a bit. So maybe they're a little bit tired out here. Maybe they're not going to be bringing it down all that much more immediately. Maybe we're going to see some kind of a rally here, okay? At least that's what I see. What about the next bar? What do you see here? And its accompanying volume. Eric says no demand. Yeah, I would kind of consider this no demand. If buyers came in here, they're certainly not that aggressive. Granted, they do gap it open the next day. This is a daily chart, by the way. They gap it open, and they rally it up, and they do close it above and hold that close pretty good above the bar before. So there's something there, but we don't see a lot of volume coming in, and we don't see a lot of, you know, acceleration to the upside. What about the next bar? What do you see here? How do you read this? Who's in control here and what's happening? Yeah, sellers, right? If we look at this, we have a fairly weak up bar here, or at least a, you know, modestly weak up bar, maybe not very weak, but given the context of what we've got here, this background, it doesn't look healthy to me for the upside. And then the very next day, the buyers can't even rally it above the high of the previous bar before sellers come in and they bring it all the way back down to the bottom of the market. Okay? And they close it on its low, and they end up on the same spot that we saw a few days earlier on this low. What about the next day? What do you read there? What does that look like? Somebody says test, but I don't think it's a test, or it's not a good one anyway. I wouldn't consider it a test. This would be the first time that I would be thinking that buyers are trying to exert themselves here, because what we see is that here sellers came in and had the opportunity to take it lower. And if we were sitting here this day and that's all we saw was this bar, we don't see anything else to the other side of the market, we would have to conclude that this market is still bearish and that the next day is likely to be down. But what happens? Instead, volume is sustained here. We dip underneath the lows of both of these two lower bars here, yesterday's bar and the one 3 days back, and we don't go lower. This is the first time I would be thinking, and also we close it above yesterday's high. I'm sorry, yesterday's close. And granted, it's not a great close, but this looks to me a little bit like bag holding, that buyers were stepping in. Certainly there's selling going on, but buyers were stepping in and holding open the bag for people to drop their stocks in, at least at this point. Now, having said that, we don't see really high volume. I would like to see this, it doesn't have to be as high as this, but I would certainly like to see an increase in volume. And here we're getting basically the same amount of volume. But what it's suggesting is that there's been buying going on the last couple of bars at least, and potentially even over here as well. But we won't know that for a while. But this suggests to me that the market's going to attempt to rally. And so it does, doesn't it? What do we see here on, let's take these next two bars. What do we see on these next couple of bars here? And their accompanying volume. Buying followed by some supply, followed by buying near the close of the second bar. Let's take a look. We notice here that we have an up bar, right? We get a rally going. And notice that there's a slight gap up from yesterday. So they open it up kind of strong, and they hold it all day long, and they rally it for the first time above the high of this big bearish day here, right? And they also close it on its highs. And what about the volume? What do you think is significant about this? What do you think is significant about this volume in this bar? I'm trying to get us really into the price bars here, get you really into them, so you can see this stuff. Yeah, volume comes into the upside, right? So when it's coming in, we're in a bearish market here, or a bearish run, I should say, and we see this kind of bar. Well, that, and the previous bar was potential, they're holding the market here, and somebody's stepping in and potentially buying it. And we see that buying followed through the next day, okay? So we're getting some pumping action in here. We don't know how this is going to be resolved, but we can start to make a case that somebody's trying to buy in here and trying to make an effect on the market. Whether they'll be successful or not, we don't know at this point, right? And the very next day kind of brings a bearish or a negative cast on the market. Although volume's a little bit lighter, it's still above average and still fairly sustained here. And we see that buyers could not rally it any higher the next day by virtue of the fact that they couldn't get it up above yesterday's high. And then it sold off. And then it closes above yesterday's low, but it still looks to me like sellers came back in here, okay? However, what I want to point out is this. Notice the volume level here all along. Now, granted, we get some pops in volume from time to time, and we get this increase in volume as it comes down and breaks through this support level. I'm sorry I can't draw on here. I don't have, the drawing tool is not working for some reason. But in general, this, I mean, you can see on the blue line here, the thin blue line is the average, right, for the volume. You can see that this volume is not really getting, you know, it's still about average. However, once we have this high volume in here, and remember, we're only to this point here, which is right here. Notice that this is a large amount of volume in this box that I'm kind of outlining here with this red ball, okay? And the slope of the average line of the volume is rising, but you don't even need to see that. Just note that we have a swelling of volume in here. And Wyckoff in 1910 wrote in Studies in Tape Reading that the end of a trend is often marked by a swelling of volume. And so if we're sitting here and watching this, even though only a few bars have taken place here, we notice that there's pumping action up and down, that there's been pretty good volume in the last couple of bars here, over here, to try to take this down, and it hasn't panned out. We get, for the first time, at least in this area, a rally going, and volume comes into the upside on the rally. Now, we still have supply in the market. This doesn't go away real quick. But you have to begin to think about this, seeing all this volume going on. We know now that potentially, at least, that there's a struggle going on between the buyers and the sellers. And the buyers maybe, I'm saying, at this point, may be trying to take over and absorb the selling that's going on in here. But sellers are clearly, with all this volume, sellers are clearly quite active here. Does this make sense to for folks? Can you all see this? You know, is this helpful here so far? Okay, so one of the things that we want to be looking for when a trend is coming to the end is a swelling of volume, okay? And we'll often see this pumping action as well, but the swelling of volume is the real key. Okay, so now the next move, the next bar we see comes down here, and we see an increase in volume. So at that point, we have to say, gee, sellers have now taken this market down and dropped it below the level where we thought we saw some buying come in, okay? So now it's not quite clear here what's going on. Now are they going to take it down further? We don't really know. Patience is a big virtue in this game, and we need to be, paying attention to each of the bars as they're coming through and to the volume, both on an individual bar basis, but also, more holistically, trying to connect it into the context of the overall market, okay? So here what we're seeing is a move down, and so we have to now wonder, is what we were reading in here incorrect about potential buying? Are sellers now going to take this down and really begin to take it down for a new leg, right? But what happens almost immediately? What do you see on these two bars here? Tell me what you see there. These couple of bars and their accompanying volume. narrow spread with less volume. What does this mean? What do you think this means here? No supply on the third bar. Yeah. Yeah. Judy says no selling pressure. Why, Judy? Why is there no selling pressure on these bars? Anybody can answer this question, but why do we see no selling pressure on these bars? Yeah, the spreads are narrow and they're closing in the middle. Okay. What logically would we be expecting to happen here on a breakdown through this support? What did we see here as we broke down through here? And are we seeing the same thing here? No, we're not seeing the same thing here, right? When this broke down, look, you know, one of the things I would encourage you to do is to try not to look at this stuff mechanically, like no supply and no demand, or because there's a little pop above a high, you call it an upthrust, or here's, you know, it closes on its low. Try not to do that to yourselves. I think that would be a disservice to your trading. Try more instead to you know, understand that that's weakness. There's no question about that. What you want to call it is, you know, it doesn't really matter what you call it, but this is weakness. There's no question that that's weakness. But try to put it in a context. Try to put it into the background of what's happening. Try to compare and evaluate what's going on now with what happened recently to come to a logical conclusion about what might be going on in the market. Here, when we broke down through these supports, what did we see? We saw spreads increase. We saw lower lows, lower highs, and we saw volume come into the upside, come into the downside, volume increase here. Here, when we break down, we don't see volume really increase. Spread does increase a little bit. You have to think that this is somewhat bearish, but how come if they broke it down below support, why is it closing above support on the very next bar? And why are the lows being held? See, to me, what this suggests is that supply or sellers had a chance to come in here and take the market down, and they failed to follow through with it. They gave it up. They gave up that privilege, okay? They were in control on these couple of bars, and they let it go. They released it back to buyers haven't stepped in here, but sellers kind of walked away from the opportunity, is the way I read this, okay? On the very next bar, yeah, effort versus result. Here's a nice effort to go down, and then what's the result? There's not much of a result. They make the effort to come down, and then they give it up. You know, they just give it up. Here's where we see support coming in for the first time, okay? Well, we saw some support potentially over here, but this is a clear indication that they brought it down and sellers could not hold it lower. And instead, what they did, what happened was, and I'm sure if we were watching this intraday, we would see light volume down here. And then as we rally, as the buyers step in and seize the opportunity, because they've been watching this, right? And they notice that sellers aren't able to take this down. And they drop, and it gets dropped down, and buyers came in force, and I'll bet you dollars to donuts we see the volume, as we almost always do, the volume increases, okay? So what can we conclude from here? Here we can say that sellers were in control. Buyers, now we know, came in because we can see the inability to bring the market down further, especially on this bar, and then it rallies up with some gusto, an old term from the 50s or 60s, I guess, early 60s. in the U.S. anyway. They bring it up with some gusto. They can't hold it, of course, because it's still premature in all of this, and then it drops down, but it comes down and sellers have an opportunity to resume the downtrend, which is what is in their interest, and it doesn't happen. Instead, we see buyers come in, and we can say that there's shortening of the thrust, a very nice shortening of the thrust down here. And we can say that volume has sustained itself throughout this area on an increased basis. It has swollen above the volume that was over here. Okay? This is how to read bottoms, or at least the way I do it. Okay? What do you notice here? Tell me about this now. Go these few bars here to the high up here. What do you notice that's going on? And what does it mean to us? If we've been watching this market, and this is the last day we can see on our chart, what do we see here, and what's the meaning behind this? So wide spreads up on increased volume. Okay, that's right. What's that mean? What's that mean? Yeah. No, not weakness. Not weakness. No. I don't see this as weakness at all. What I see is strength. Janet says buying's coming in, and I agree. Buying is coming in. Look at this. Look, here's a different way to think about this. Looking at any rally bars, any of these rally bars in here, okay, at the time, from what we can see on the chart from when the market has rallied, do we see any spreads up, any price bars with ranges or spreads like this, with this kind of volume on this whole downtrend? Do we see any of that here? Yay or no? Yes or no? No, right? Yeah, exactly. So this indicates a change of behavior. For the whole time, we've seen anemic rallies, rallies that don't amount to much. Maybe we get a widespread bar, but there's no volume behind it. Most of the time, we get these sort of crummy little bars and this choppy little action. We get a little bit of sustained activity here, but look at the volume. It just dries right up as we rally up, right? For the first time, what we're seeing is widespread bars coming up, volume increases to the upside. That is buying coming in. Somebody suggested that there was supply or no participation. I'm not sure what they meant by that. But what I see is that buyers are getting eager. They're getting aggressive in here because we see the high volume and the wide spreads up. Now they take it into the gap area where we see some, where we had that big supply come in, and not surprisingly, they get tired out here. They rallied it up for 3 straight days. That's generally pretty good in the markets. I think this is not the S&Ps. I forget what stock this is. This might be XLE. It might be a sector stock. I forget. So we see, what do we see on this bar here? Well, let's just talk about let's say the next 3 bars. What do we see here that comes in? What do you all see here, and what do you think it signifies here, this bar? Up thrust and no demand equals weakness. Yeah, okay. Would we say that weakness is, that this is really weak, strong weak, or weak weak? Do you understand what I'm saying? Is this, and I'm sorry, I'm not feeling particularly swift this afternoon. I can just feel I'm getting kind of a flu or something coming on. So I might be, kind of mixing up words here, and I don't mean to do that. Is this now compared to what's been going on here, is this significant weakness, or is this maybe just weakness that is not all that strong? Weak. Okay. Yeah. See, Judy's we're getting a strong background coming in here. We're getting a strong background because we've got this pop up here in a bullish move. We've got swelling of volume. We've churned around in here. All the things that we've talked about, the shortening of the thrust, the big buying that's come in here and here and here. So really, probably what's happened is that buyers got a little bit exhausted. They're a little bit tired from all this big effort that they've been putting in on these bars and on this couple of bars here, and maybe even over here. We don't know, but certainly we know here there was buying and here there was buying. And so now there's a bit of exhaustion probably, and we're going to see this market roll back over, especially on this bar here where we see, look, if we walk through this, buyers stepped in force here. It got dropped down to the same level as where sellers gave up their advantage on this bar in the morning most likely, and then it rallies back up and closes on its high and above the last time selling came into the market in some force. That's very bullish. That's very bullish. The next day hardly has a reaction before we rally up, and for the first time we close up above this whole level in here, whereas we hadn't been able to do that before. Okay, so very bullish behavior on these three bars. The next bar rallies up, but we are not able to sustain higher prices, and not surprisingly because of the aggressiveness of the buying that's been going on since the lows here. And on the next day, however, it dips down, but they rally it back up and they close it about level with this bar that's so significant because it closes above the highs of all of these bars. So for the second time, we've seen it close up here. That's pretty good. That's pretty strong to me. On the next bar, they try to rally it up, can't hold it up here, can't hold much above these highs, and it comes down. And so weakness has come back in, or most likely because we see, volume drying up here at the highs, most likely what we're seeing is that the buyers are just beat at this point. I'm sure that, if you were thinking in terms of market manipulation and professional money and smart money and all that, they're going to let it come back down again. I tend not to think about that. I'm just looking at who's buying, or not who's buying, but who's in control here. Is it buyers or sellers? And who's stronger? So at this point, I would have to say that we had lots of selling in the market. Buyers have stepped in, and now we are likely to see a retest of this level down here at some point. We don't know where that's going to come in, but we're likely to see some testing going on over here because of all of this volume that we saw in here. And so that's what happens. The market comes down. What do you make of this bar here? We gap open, gap lower, close on the lows, and we get an increase in volume. What's that say? Tade says, is this supposed to start at 6 p.m. UK time? I don't know. I had it down for 1 o'clock Eastern time, my time. So that's where I am. Climactic action because next bar is up. Well, I'm just saying, when we're here, what are we thinking about when we're here? Let's try to make this as if we're doing this real time. Sellers were in control for the moment. Yeah. Somebody says shakeout. maybe we would have to see the next bar before we say that. Maybe it's a shakeout. If we were looking at this at the time that it was happening, and if I were long here, ooh, I'd be a little concerned because I wouldn't be sure, to tell you the truth, what's happening. I know that there's strength in the background at this point. I know also that they often do this, that they often drive it down, right? So I wouldn't bail out of my position. I wouldn't jump out, but I would tighten up stops potentially, or just be prepared for a loss if that occurred. But I've seen this so many times that I know that, you know, they're going to give you one more gut check, so to speak, before they turn it around. So what happens on the next bar? Yeah, and Debbie says that price might go lower. I would think so too. I would be, you know, anytime a market closes on its lows and it's on increased volume like this, especially, you expect it to go lower the next morning. I mean, people have done statistical analysis on that, and that's that's a fairly robust, pretty robust finding. That, you know, the odds are very good that when a market closes on its lows and has a wide spread or wide range, and there's been some volume, there's been some movement that day. This was most likely, if we were looking at this on the intraday, this is a trend day down, right? So the odds are very good that we're going to see lower prices the next morning. And yeah, some continuation in the direction of that reversal on high volume. Exactly. And I'd be expecting that. I also know, though, that there's some strength in the background, and so this doesn't just go away by one bar, all right? This kind of stuff here does it, and all this pumping action and the shortening of the thrust and all of that. It can. I mean, I've certainly seen it where it's happened, but the odds are that this still is gonna not be overwhelmed by one price bar and volume bar, despite how high it is. But the next day, we see that this was some sort of a shakeout here, or at least, I don't, call it what you want. To me, buyers come, they bring it back down to the same area, the same level as where we saw buying come in force, and now they come in force again, okay? We're going to talk more about buying levels. Yeah, buyers strongly reassert control. It's not quite a spring, but I understand what you're saying. It's similar to that. All right, so then we rally up a little bit. What do you make of these two bars here? As we rally up, volume gets light. What do you make of that? Is second bar a test? Possibly. Suspect for continuation. Testing to see if supply is gone. Yeah, there's some of that going on for sure. On the second bar in particular, they brought it back down to the same level as the buying that we saw, and it rallies back up. But it's on light volume, right? That's one of the things I wanted to say is that rallies often happen on light volume. I know it can be confusing because here we're saying, gee, oh, this is on big, strong volume, and this is really bullish. Well, this is bullish too. Bullish because, as somebody said here, Janet says, as they brought it down into the lower area here, lower prices were rejected, right? What's also important is the closes here. It's been brought down twice here, and the closes are closing above or into this gap area, above this big bearish bar that we saw with the high volume that we were all concerned about. As we imagine what it would be like to be sitting at the right edge of the chart at the end of this day. This was, for any long positions we had, this was a little bit scary. or a little bit concerning at least, maybe not scary, but concerning. And now all of a sudden we get this reversal, and now 2 days holding above this big apprehensive day here. Okay, that's bullish. To me, that's very bullish. And then what happens? We get another gut check in here, so to speak, right? Similar to this day. We don't expect big push down like that. We don't expect this to happen either, but it does. Okay? And then the next day is up. And notice that the volume comes into the upside. Now, I'd be buying on this bar with a stop underneath here somewhere if I saw this, because once again, just like here, and now here we're seeing selling potentially in control because volume, I'm not quite sure, I guess it's this low volume here. So it's not big volume coming in, but selling is potentially in control because it couldn't hold higher prices. They close it on the lows, but then buying comes back in and we see an increase in the volume, meaning that buying is coming in strength. So it's a good spot to buy in my judgment. You know, you don't know if you're going to get this kind of testing in here, which occurs the day after. And then look at this. So let's imagine for a moment that you didn't buy on this, or this, and not even on this. What about this day? What do you notice here, and why is this so bullish? Why is this so bullish here that day? Why is this so bullish? Closing at the top, yeah, that's part of it. But if I were stalking this, and this is an ETF, I think. So if I were looking to go long, if I were, you know, this day was over in here, and I'm looking to go long, I'd be buying much earlier than the close. Yeah, closings are good, and closing above the gap down day, no question about it. See, what I'm thinking is this. Yes, the gap up, exactly. What I'm thinking is this. Okay, we're churning in here, but I know there's strength because they had plenty of opportunity to go down. The question is, when is this going to be over, and when are we going to rally, right? I want instant gratification. Not really, but I don't want to be sitting through, you know, churning or back moves if I can avoid it, if I can help it. When this thing gaps open the next day and starts a rally, then I know that all of the testing is probably over. Okay, all the testing in here is probably over. So just a little tidbit about how to enter on something like this. You know, after you see this kind of churning motion that goes on, this Sturm und Drang, and notice that the buying level, I'm sorry I can't do the pen here. If I could, what I would show you is, and this happens so often, it's something just to be aware of, that the buying level here, and here, and here, and here is about the same. If we were working a point and figure chart, which Wyckoff used to use a lot of, in fact, he started using point and figures before bar charts. Bar charts came in afterwards. Point and figures were available to folks back in the late 1800s anyway, when Wyckoff was doing his work. Anyway, the point is that if we did a point and figure chart, we would have a line right along here that would illustrate the buying that was going on. Okay? So, this is a good little model to utilize in assessing, what's going on here. Everybody still hear me okay, or did we lose connectivity again? Or you can hear me. Okay, good, good. So this is something to be aware of. In Wyckoff terms, we call this cause. Cause produces an effect, right? The cause in here is all of this churning around. It gives the professional money, it gives buyers, whatever, however you want to think about them, it gives them an opportunity to acquire an inventory. And once that inventory is acquired, then they will rally it on up. Or if we saw this, as distribution, once they have redistributed and created a short inventory, then we would expect the market to go down. But today we're talking about bottoms. It's the same thing in reverse. Does this make sense to people? Is this helpful too, is a good question. Try, to help yourselves as traders, try not to be thinking mechanically about, this is a test or that's a no demand or what. I mean, you can do it that way if you want to. If you're interested in the way that I look at the charts, I try not to do it mechanically. And I try to understand what's going on in the charts through a little bar-by-bar kind of analysis. Okay. Shall we move on then? What do you think? Okay, good. Somebody says this is a rounded bottom and not a B, or a V rather. Are most market bottoms rounded? Most market bottoms take time to evolve. A V spike reversal. I can't show you what that looks like because I don't have this, but a V spike reversal would come down, make a low, and then immediately start to rally up above. Happens 10 to 15% of the time. They're just not worth trying to trade because 80 to 85% of the time the market well, I'm not going to go through this one. I was going to do this, but I won't do that. I'm not going to do that. Anyway, 80 to 85% of the time the market will produce more of a gradual turn in the market. Now I want to show you something here on this chart, and this is the lows of, this is the S&P E-mini, and we're going to blow it up in a second, but this is the S&P E-mini at the lows in early to mid-February, before we got this tremendously nice rally in this wonderful bull market that we're in, okay? Let's talk a little bit about this, and let's see. Here's a blow-up of that same area. And I'll go back to the area so you see this. So you see this well. If I can get back there. There we go. And there you go. Okay, so notice here, 1, 2, 3, 4, 5, right? And notice also that, well, let's back up a second. Forget about 1, 2, 3 for the moment. Here is this is a 60-minute chart of the S&P E-minis, just the day session data only, not the overnight. The overnight complicates things and makes things more difficult to read, and I'd like to help you to see this in a more simplistic and straightforward manner. So here are the mid-January highs, okay, January 15th through the 20th, before we fell down and had that good reaction, the biggest reaction we've had since the March lows, mind you. And then we consolidated and then we rallied up in February from there. So this was a bottom, and I want to show you how to read this bottom because it was very readable. And in fact, I was with Gavin and Richard and Sheenan and Thaddeus at the New York Expo on the day after this chart right here. and I said we're looking for a long position. I was doing some live trading in the morning in the booth that they had set up in the Marriott Hotel in the New York Expo, and I said I was looking for an opportunity to go long if one presents itself, and it certainly did. And that's I'll show you why I was thinking that. Okay, so mid-January highs, we drop down. Notice we have a supply line at AA, and we have a demand line at BB, okay? So now I'm going to go to the detailed chart so you can see this a little bit better. And here we are. This is supply line AA, and this is demand line BB, and here we are down in early to mid-February. Now, ignore 1 and 2 for the moment. We'll come back to that. Notice at 3, we dip down and drop down below the demand line. We get oversold in the trend channel. Okay? This is the first time that this has happened. And immediately, look at what happens on bar 4 and on bar 5. We turn right around in the middle of the day and rally up. What do you think about bar 5 now, particularly with the volume that's occurring here? What does that say to you? Scott says buyers are ready to buy. I think buyers are buying there. Yeah, buyers are coming alive. That's right. Buyers are coming in, and they are alive here. Okay. Now, I don't have the rest of the chart up, but I can tell you that I don't think, I'm 99% sure that there's no other up bar like this in the downtrend with this kind of volume on it. Well, let's go back and see. See if I'm telling the truth or not. And here you go. Just take a look at this. If you remember nothing else but this, here's the volume. And if we drew a line back, well, here's volume, but it's coming down, right? Here's some high volume too, but that's coming down as well. Okay, so this is the highest volume that we see going up, right? And look at the size of the range or the spread. Of course, always being the spread or the range is the difference between the high and the low of a price bar, right? This is a 60-minute chart, so this is fairly significant. Well, we've got a little bit of a wide, but it's not quite the same, not quite as big as here. And gee, I don't see any more. Just this here, and I don't see anything as large as this spread here, or this range, and certainly not on this kind of volume. You know, even if we look at this, look at the volume is half of this here, right? Change of behavior from days and days and days. Each one of these blocks in here represents days. Several weeks worth of downtrend. This is the first time we see this kind of buying coming in on the hourly chart. Okay? And it's coming in where we would expect it to, but we wouldn't expect this kind of a reaction. We'd expect maybe, you know, look at the last time it was at the demand line. Well, demand comes in, but look at this kind of look at this rally. It's a rally, no question, but it's not anything to write home about, right? And most of the time when it came down along this level, look at the anemic rally that we had here. This was the first time we saw a halfway decent rally, but this was truly nothing to write home about. But now we see demand coming in, and we see it coming in force. Okay, everybody see that? Does that make sense to folks? Is this kind of like, hopefully this is a little bit eye-opening for you, or, you know, helping you to see things a little bit differently? And we'll shift over to the daily chart, or to the blown up chart. Okay, so what happens? We get this big volume coming in and widespread. So immediately we need to be thinking about change of behavior, because we're taking the back, Tom always talks about background conditions and bringing the background into the right edge of the chart. And it's really important. And this is one of the ways to do it, is to compare, the spreads and the volume of what we've got in the current bars with what we've had in the past and see if there's any difference. Well, there's certainly a difference here, okay? So we rally up and we hold that rally. We hold these highs this day because it closes on this bar where this line is, right? This is a session, what we call a session break, okay? Then it rallies up a little bit more the next day, but it doesn't do much, right? Doesn't go very far. And then we start to come down. And look at bar number 6, right? Look at the volume on this. What would you, if we were sitting, and this is, this day closes here, it closes on its low. One of the helpful skills to have is to be able to see different time frames off of the time frame that you're looking at. So here we have a time, if we were to go to the daily time frame off of this 60-minute, if we were to think about what this would look like in one bar rather than 6 or 7 bars here, well, we would see this kind of opening here, rally up and then close, and then come down and then close kind of on its lows, okay? And we would see this volume at the end of the day come in, right? Sitting there at the end of the day and looking at this, you'd have to say to yourself, gee, we're closing on the low. I see a pop in volume here. Wouldn't surprise me to see us come back down and test around 3 or 4, or maybe the low of 5, somewhere down in here, right? That would be the normal expectation. That's what I would kind of expect. Instead, what do we get? We gap open the next day, right? We gap open and we rally up. And notice that when we, on bar number 7, it dipped down, and as soon as it got down into this area where we see 5 here, and you'll see that I drew a green line, and you'll see also that we dipped down in other spots too. But as soon as we dip down, we rally up, right? On big volume, almost as big as 5, not quite, but almost as big. That's buying coming in, right? That's buying coming in. And then we drift off, right? Typical behavior of accumulation areas. It gets dipped down into an important level, and we don't know what that level is. We have no idea what that is when this is occurring. We don't know that until later, and I'll show you how we know that later. But we can suspect that it's somewhere around here. It's important, but in any event, it gets dipped. This is what happens in accumulation. It gets dipped down to a certain level, and that's where we see buying come in, okay? And what happens the next day? Very next day, it gets dipped down. Now we're beginning to see something here. At 5, we certainly see big volume. 6, it comes down to a level, a spot, and then it rallies up the next day. 7, it dips down into that same area, and now at 8, we dip down, see the high volume come in. It closes off the high and then rallies up after that. The very next day on the open, at 9, it holds this level. So you can see at 1 here. And then at 10, what happens at 10? What do you see there that's important to us? 10 meaning this area in here, not necessarily this price bar, although that's part of it. What do we see here? We've come into the overbought area, right? And what do we do? Yeah, exactly. Michael's got it. Closing above the trend line. We're closing above the supply line. Think in terms of, I like to think in terms of supply and demand. And here, demand is overcoming supply. Okay, it's overcoming the supply line. You all see that? That's the first time this has happened, right? Okay. Then we dip down and we come back right into this level here. And I drew a green line. I think it's at 1058. But certainly they were buying anywhere between the low here of maybe 1053 to 1060 or so, right? And so the next day they buy in here and then they rally it back up above the supply line again and close it up there. For the second day in a row, it's closed above the supply line. For the second day in a row, supply has overcome demand. Now, if we're sitting there and we're looking at this on this day, and we drop down to this hourly chart, we can see this line here, which I think the green line is around 1058, where each time it was dropped down to that area at 6, 7, 8, 9, and 11, buying came in and drove the market higher. Okay? We can then extend it out a little bit beyond that and say, gee, at 1 and even 2, although they dropped it down lower, but even here we can see that buying was coming in. Look at it 2. Look at the volume pop up in the late part of the morning here, right? And look at volume pop up at the end of the day here on 1, right? At that same level. Now, we don't know that at the time. There's no way we could know that at the time unless we're, you know, in with the people who were buying who said, gee, around 1060, 1058, we want to start buying this thing. We can't know that. But we can know it when we get over into this area. We can extend this line and we can look and we can make a logical conclusion that, gee, the high volume here and the way the market acted right after that suggests that there was buying going on in here as well, though it wasn't detectable at the time. Once again, if we were to use a point and figure chart, we would see this line of figures being developed along 1060 or so, and we would be able to identify a cause meaning an inventory building along the 60 line here, and that can project something to the upside. Okay. The other thing to note too is that I drew this red dash line here, that each time we dip down at 6 and 8 and 9 and 11, buying comes in at higher levels each time. What do you think that means? That buying comes in a little bit higher each time it dips down into that same general area. What would that signify? Yeah, buyers are getting stronger, or maybe a term that I would use is more eager or aggressive to get in, and supply, the supply that was here, now at 7 and 8, there's no more supply down there. It's getting harder and harder to buy lower and lower. So they're buying earlier and earlier, okay? We see that in any kind of trend line. As we get down to the bottom, if it's not breaking through and getting oversold, we might see that buying, this is shortening of the thrust. This is shortening of the thrust in reverse. But on the downside, if we were looking at shortening of the thrust, we're seeing buying coming in earlier and earlier. Well, that's what we're seeing here, okay? It's just a little different than shortening of the thrust, but it's the same idea. Buyers are stepping in as we evolve through the accumulation area, all right? So that's a way to look at accumulation. Not very different than the first chart we looked at, right? There's a level of buying going on, but we didn't talk as much about that until this. And this gives you the detail. This is a pretty nice example of it. But you can see this in almost any chart. How is this? Does this make sense? Oh boy, I'm sweating away here. I took some Theraflu, and that's helping, but I'm still feeling pretty punky here. Yeah, is this helpful, I guess, is the question. I always like to understand whether this makes sense to people or not, and if this is helpful. Because that's the idea here in the VSA Club. What we're trying to do is, and I'm giving you a different look. You know, I learned this from a individual who is an expert in Wyckoff, and he taught me how to read the market exactly like this. It took me a while to get. I was sort of, you know, bumbling over the charts and stumbling over them, but got to the point where I could read it like this and read it pretty, you know, pretty good real time. And again, probably wouldn't know that this is occurring until maybe 8. Maybe I'd have an inclination at 7, but certainly by 8, and for sure by 9, I would be thinking, gee, they're accumulating here. And I'd have a good sense of what's going on here. So where would I set up a trade? It's a good question. Yeah, and Janet asked, would I set it up after 11? Yeah, I might even be thinking, you know, when I see 10, I might be thinking, gee, we could be going higher today, you know, on day 11 here. You know, if I were sitting at the end of the market here at 10, I'd be thinking, gee, we've now made a higher high in here. That's pretty significant. We're likely to go higher. Now, I might be a little bit surprised to see it gap down the next morning. But once I saw it holding in this 1060 area, then I would be thinking, okay, it's just doing more of the same. They're dipping it down one more time. I'd be looking at the volume. The other clue to all of this, too, I didn't mention this before, but look at the volume between 5 and 7 and 8, 10, and 11. All the buy points here, and it's just going down and down. So you can see that even from 7 to 11, and here we're lifting supports, or what Wyckoff's called supports, we would call lows today. We're lifting the lows here. The volume is drying up. So as soon as I saw that, as soon as I started to see this rally, probably somewhere in here, I'd be looking for if I were swing trading this, and I did, in fact, looked for a trade in here and started to put a few longs out, and then, you know, protect it down below 6 for sure, somewhere down here. And then as this thing rallied up higher, the next day was kind of interesting because we closed this. I remember this very well. We closed this day at 1079.25, and the next day gapped open a little bit, came down to 1079.25, bounced off of that once, bounced off of that twice, and continued on up the rest of the day as a trend day up. So that was another, you know, we were looking for and did enter trades at this 1079.5 level or 1079.25 level. But yeah, you'd be looking, if you were using this chart, you would be looking in here and saying, gee, it bounced one last time, pushed back up above the supply line. This is a good place to make a bet. Does that answer your question there? Okay, good. All right. Yeah, somebody, I don't like to advertise here too much, but yeah, this is part of the 8 weeks course. We're doing the spring version of it. It's starting in April. We'll do this kind of stuff throughout. And if you want more information, just take a look at my website. You'll see it over there on the blog for sure. Okay. All right, yeah, I'll put it in. It's here. It's www.tradingpsychology.com. edge.com. Yeah, if you're interested, this is the kind of stuff that we talk about, that I teach. And let me just make sure I'm spelling all of this correctly. Trading PSY. Jeez, you'd think I would know how to spell psychology after all of these years. Okay, so there's the website, and on the blog you'll see links and references to that course that runs for 8 weeks. All right, so here let's have some fun. All right, what do you see here? We're going to go through bar by bar. And then I'm like dripping with sweat over here. So, and I've got, my mind is getting kind of cloudy from the flu medication. So then we're going to end. So what do you see here? What's happening on this chart? Drink plenty of water. Yeah, I'm going to try. I know I don't drink enough water during the day. What do we see here on the right of the chart, on the right edge of the chart, and how does it relate to the rest of this market? Widespread down with increased volume. Okay. And what does that mean for us? Yeah, it's the highest volume on the chart. Good observation. And it closes on its lows. What does it mean? Sellers are in control. Yeah, strong break below support. That's important. This is what we expect to see when we break below support. When we don't see that, like in the last, not the very last chart, but the chart, I guess the first chart, right? When we don't see that occur, then go back and listen to the recording for that. When we don't see that occur, then we have to question whether sellers are in control. But here, they clearly are in control. Good observations, everybody. All right, let's see what happens next. What do we see here? Who's in control in this? Sellers, right? Yeah, sellers have to be. Widespread down, closing on the low, volumes coming in. Now we're getting a pop in volume, so that might mean something to us. We note that, but we don't know. We don't know whether buyers are actually entering here. We have no idea about that, but we do note it. Here's a thing from the Wyckoff folks. Bob Evans, who was the director and owner of Wyckoff Associates from about the late 40s into the 1970s, I think, and quite an educator. He would say, when you see a big bar of volume like this, what we would call in VSA ultra high volume, when you see big, massive volume like this, you don't necessarily know what it means. And from the close on this, look at this. It's closing down below the midpoint in the lower, certainly the lower third of the bar, right? There was no rally ability on this thing, and the spread is still pretty wide. So we don't know. We can't say buyers have come in force. Maybe there's some buying in here, but we just don't know. So, however, Evans used to say that this volume is really important. We may not know what it means. And he was sort of a very, in the U.S., we would call him kind of corny, you know, corny, C-O-R-N, I guess it's Y or N-E-Y, I don't know how to spell it, but the idea being that you know, he's very folksy, very kind of with the people. And so he would say, take a wad of peanut butter or a wad of chewing gum and stick it on your chart where that high volume comes in, because you want to remember that. You may not know what it means now, but it is significant. Okay, so we would stick a wad of peanut butter here and just note that that can be something of significance coming, you know, as the chart unfolds and as the coming bars unfold. And so what do we see here? The very next day. Buyers potentially coming in. Yeah, we would have to say that because of the high volume here, and then it turns around like that, right? Let's keep going and see what happens. What's this look like for us? More buying, right? Yep, more buying. And potentially bullish here. Yeah. Have we seen a gap up on this downtrend here? We might have, but not as significant as this, have we? Okay, so potential change of behavior here. Let's see what happens on the next bar. What do you make of this? Yeah, sellers step back in control here, right? But on less volume. Michael says some sort of a test. Spread is way too wide for a test. What we want to see on a test bar is low spread, I'm sorry, not low spread, low volume and narrow spread. We have kind of the low volume here, but even lower than that is better than this volume that's depicted here. But we want to see a spread. Let me see if I can see a test quickly. Here's a pretty decent test here. I don't really see another one, but ideally what we want to see is a bar that's really narrow, more like something like this or something like this for a clean test. Here what we see, also Michael, let me just make, and to everybody else, here we see the market rally up above the high of the last bar, come back down, push back down through that gap area and close equal to the bar over here and on its lows. So even if you viewed this as a test, you want to be very careful when they rally up above the high of the previous bar and then come back down and close on their lows in particular, because that's more selling than anything else. And you can see, I mean, buyers were unable to hold above the highs, and they couldn't even hold above the lows. Let's go to the next bar. What happens here? Yes, Nella, too wide for a test. That's right. What do we see on this bar? Buyers back in again, right? So all the selling that occurs here gets wiped out on the next bar, and they rally it higher and close it higher. Okay, and they come into the resistance level that existed over here. Not a surprise that they would hit this resistance area and get and have difficulties, right? What else do we notice about this chart that might indicate that buying is taking place here? And also, by the way, not just here, but all the way over back into here too. We have this resistance line, or this support line that now is turned into resistance. And again, I apologize, I can't draw for some reason. The software is not letting me draw. But what do we notice on this chart, this whole chart, that suggests that there might be some changing of behavior? Volume's increasing when the price moves up. Well, not quite, because every time it's moved up, volume is coming down here. Yeah, swelling of volume, exactly. Look at the volume that's occurring here and compare that with all the volume back here, right? These are little guys in here and little people in here, little, you know, if they were standing up, as Gavin likes to say, Shock O'Neal and all of that. They're all fairly small folks in here, but now you're getting the basketball players standing up in the lineup over here. So potentially that means that there's some changing of the behavior in here. Let's see what happens on the next bar. What do we make of this? What do you all make of this? Good for you guys. You guys are good. Indecision, neutral. Yeah, exactly. I couldn't tell you what this means. I mean, this is kind of like, gee, it tried to go up, it tried to go down, and it closes in the middle, and the volume is kind of lackluster. Still high, but compared to everything over here. But you know, I can't make heads or tails out of that bar, right? So, you know, even though we go through this bar by bar, it doesn't mean that we can read every single bar that's on the chart. So keep that in mind too. That's important. When you don't know, you don't know. It's not a you know, it's not a big deal. You just say, okay, I'm not clear about what's happening here. I need to wait for the next bar or two. What do we see here? And what do we see, and what does it suggest for the next bit of action in the market for us? Okay, we're getting bullish and weakness at the same time. Here's how I would kind of read this bar, okay? And Debbie, you're right about that. Debbie says the next bar is likely to be down, or the next move in the market is likely to be down, and I think she's right. Here, look. We've rallied up nicely. We came back down, couldn't go any lower, held it on both of those both times after that, both bars after that. Had this indecision day, or this I don't have a clue what they're trying to do here type of day. But I do here, because here they try to rally it up, and notice they hold it between the close of the day before and the high of the day before. And the volume is really shrunk down, and it closes on the low, but the spread or the range is pretty narrow. And it's within, you know, the upper part of this bar. It suggests to me that yeah, there's some bullish sentiment there, certainly, but it doesn't, sing home to me like it's going to rally up higher than that. So the next day it's either got to go or it's likely to come back down. Let's see does that make sense to everybody? We'll see what happens with that. Does that interpretation make sense? And now, mind you, I've certainly seen it many times when it's gone and rallied up aggressively from there. But the logical response would be to say, or the logical conclusion would be to say that this response of the market is not all that aggressive, and we're likely to see some downside. And we're still early kind of in this trading range here too. And that's exactly, in fact, what happens. It makes an attempt to rally up the next day, runs into resistance at the high of the day before, and then comes right back down. Now notice where it holds. We're getting a support level here, aren't we? Interestingly enough. But it does so on an increase in volume, and it closes in the lower part. So the odds are that we would be looking for, this is getting significant in here. And a break here would suggest that we would probably go lower. And if it holds, then maybe we're buying. This is the buying level here, though we don't see that over in this area. I hope I'm making sense because my mind is kind of cloudy here. Let's see what happens on the next day. So we do dip lower, right? And we dip lower with an increase in volume. And we close at about level, unable to rally very high. Probably what happened was we tried to rally, we came down, and it came back up to this level on a bit of an increase in volume. When you see a bar like this, what does this suggest to you? Are we going to rally from here, or is it likely that we're going to go down from here in this kind of a configuration? We have rally, rally, sideways, down. Okay, let's see what happens. It could go either way. Let's take a look and see what happens. We come down. Any idea why we do come down? Because I imagine everybody's thinking about springs. I would imagine you're thinking, okay, it dipped under here, under this support level, and then came back up and held, right? What I think, one of the things that I look at certainly is the close. To me, what was key in this was where this closed. Dipping underneath here and then rallying certainly is bullish. To be really bullish and to make me think, okay, we're going to go up higher, it should close on or at least near its highs. But it doesn't do that. It doesn't really show much upside here. And it's more like it's sliding down here a little bit, and it just kind of slipping and sliding away, so to speak. Hopefully that makes sense. Okay, so we're coming down. What do you notice about this coming down here? What do you think about this? Decreasing volume, yeah, result doesn't match the effort, does it? Exactly. And there's still a little supply, and it's breaking down through the previous supports, right. All of that's correct. However, look at the volume. The volume is drying up as we're going down, even on this bar. Here, on the bar before, we had more volume than we do on this bar. That's suspect. That's very suspect. Yeah, my radar would be up too. I would be suspecting a potential shakeout here. Okay, let's see what happens. And there we get it. What do you think about that? What do you all see here? Lots of buying. Yep, exactly. Lots of buying. Buyers are coming in force. We again have the highest volume on this chart. It's on an up bar. We haven't seen that in this whole downtrend. Okay? Remember that. That's a key thing. So you could take a very aggressive trade here because of this. It is a spring. Now, springs don't typically work all that well in a downtrend, but here's an instance where it probably will work. And, I know the chart, so it will. But the reason it will probably work is because of the lack of volume coming down and the humongous volume coming up. It's not to say that this can't fail, because it certainly can fail. And most springs in a downtrend do, in fact, fail. This, however, would be something where you might want to say, okay, I'll put a small position on. Let's say you trade with, I don't know, I'm going to make up a number, 500 shares of stock. So you might want to begin with 100 shares here. Or if you trade with, 200 shares, you might begin with 50 shares, something like that, okay? Have I found through the years whether a spring with this much volume might retest? Yeah, probably will. It probably will. I've also seen them, though, and you don't really know. SMI, the Wyckoff folks, and Bob Evans was the one who did this, I think, started to categorize springs as a number. He would see this as a number 2 spring because the volume is really large. And he would say that you should wait for that to be tested. I don't know. Probably about, I think in my judgment, around, so he would call this a number 2 spring. A number 3 spring would be very small dip underneath and like no volume at all, like volume like this, okay? That would be a number 3 spring. And so Evans would say you can buy immediately on a number 3. You should wait for a test before you get into a number 2, okay? A spring like this. I don't know. I've seen them rally off like this. I'd be pretty confident in this one. Even if it does get tested, I wouldn't be too concerned about it because this sure isn't supply. Somebody's stepping in and buying here. They don't want it to go down. And we saw initial buying coming in here. So I don't know. I wouldn't be too concerned about that anyway. Me personally. I mean, that doesn't mean that you shouldn't be or that you might want to wait for a test. There's nothing wrong with waiting for a test at all. Nothing whatsoever. It's just that I've seen enough of these that I'd be willing to take the chance. What's a number 1 spring? Well, a number 1 spring just keeps going down. So figure that out. I don't know exactly what that means, but let's see how this one plays out. And let's see what else we can learn from this chart. So we start to rally. Does this, what do you all think about this? And particularly the volume here. What do you think about this? What does this say to you? Buyers are tired, less buying, may see a retest of the spring. Buyers not fully convinced yet. Okay, weakness coming in. Well, when I look at this, what I'm seeing is that they open it up, hardly drop down at all below yesterday's close, and rally it up, and then close it above the high of this drive down below the low of the support level. To me, this is pretty bullish. Don't get fooled by the volume. We will often see, particularly after a big volume day like this, we will see the market start to float up. I think it just means that there was so much transfer of stock on this bar that there's just nothing left. To me, this suggests that there's no sellers left. Not that there's no buying going on, but there's no sellers here. In other words, there's no supply to absorb in here. And so the market just kind of floats up on its own, and it rallies up from, I don't know what this level is, 1.5 to 54.5. It rallies up 3 points. That's not bad in this stock, you know. 3-point day on a $50 stock, $55 stock. I don't know, what's that, 77%, 6%, something like that? Well, maybe 2.5%, whatever. We rally up again. The next day it holds in here. Okay. Again on light volume, just floating up. See this a lot. Look at this. How can it do this? Right? How can it give me this big rally on such light volume? See, there's nobody believing that this thing is going to go up. Let's take a look. What do you see here now? What does this suggest? This bar here. A little supply is coming in, right? Not so much indecision, but some supply is coming in because we see a big volume here, and it tries to rally up, and it fails to go much higher, and it kind of closes mid-range or mid-spread, I guess, at the same level as the bar before. The reason that's happening, of course, is because we have over here to the left some resistance. There certainly would be people who bought on this bar right at the highs, convinced that it's going to go rocketing up to the moon, and even along in here as it rallies up, and people would be enticed to go higher, to buy because they think it's going to go higher. So when it gets up, and they would be holding throughout all of this, believe it or not, right? They'd be holding down in here, and as it comes back up, they're happy. They're thankful, in fact, that they can get out at even, that they don't take a loss. And then there's other folks who know that this resistance area exists, and they might go short here. And then some of the people who bought down in here might say, okay, I'm going to take profits in here. So some profit taking, not a surprise as well at this level. So we would expect to see a little bit of supply come in, okay? Let's see what happens next. The next bar up, we see, what do we see here? This is kind of a classic VSA indication here. What are we seeing? No demand. Not no supply, Scott, but no demand. Just the opposite. You probably meant no demand. What it means is that there's a lack of buying going on up here, a lack of buyers. And it may be a little difficult to see because of this bigger pop in volume, but this volume is about the same, maybe a little bit less than the bar before this big pop here, and certainly less than this big pop in volume. So if there was buying here, then how come we don't see it on this bar? Well, we don't see it because we're in that resistance level, or at that resistance level, that zone of resistance, and the buyers are just simply pulling back a little bit, not willing to chase prices higher at this moment. Okay, it doesn't mean that, look, because we see no demand here on this bar, it does not mean that any of this has changed. One bar does not a chart make or a trend make. Okay, had this been a weak rally up, then we might think differently about these couple of bars. But this has not been a weak rally up. It's been pretty good. We're closing on the highs. Spreads have been reasonably good here. What do you think about this bar? And also, this is not, somebody says test in a rising market. Not a test here. We would want to see this bar be down a little bit lower and closing underneath we would want to see it be a down bar, which means that it closes below the close of the previous bar. That would be a test in a rising market. But here, it's just the opposite. It's lack of buying. There's no buying coming in. Okay, not a test. Is it floating up? Possibly. Possibly it's floating up. Why would we say that? Well, because we get this no demand, and then it dips lower and all of a sudden rallies up and closes up on its high. But look at this volume here. That's suspect. Even if we thought, okay, maybe it's floating up, but this volume is going to tell us to begin with, we would want to be a little concerned. Not so much when it's lifting off, right? Low volume when we're lifting off is one thing. Low volume after we've already lifted for a while and we're kind of in a supply zone here. Low volume is telling us that something's suspect here. The other thing about this is that even though it closes on its high and it dipped underneath and it's all of that, if we bring our eyes back over to the left-hand side of the chart, we immediately bump into this bar here, which was the breakdown bar of the support level. Okay? So there is still supply left in this bar. And we would not expect a market to be able to rally up above this on such light volume. We'd need to see more effort behind that move. Here we're seeing, Janet says result does not match the effort. Exactly. We're getting a pretty good result, but there's no fuel behind it. There's nothing behind this move. Why do we have very wide spread with very low volume? I don't know. I'm not sure. Except to say that there's no selling going on, Judy, is there? All right? As we come into this area. So that's a side, that kind of weights it over to the bullish side. And really that's what we're doing in this, is we're adding weights and taking them off and putting them on the other side. We're the scales of justice, so to speak, if you think about them. Instead of justice, think about the scales of buying and selling. And so we would put a little bit of weight on the buy side, but we'd have to take it off because the volume isn't there. Okay. Plus we're coming into a supply area. So let's see what happens with this. And if we're not sure, we wait to the next day and or the day after, and usually things will start to clear up in a day or two. So we were a little confused on that, and that's okay. What do we see here? What do we read from this bar and this volume? The lows held, but closing down near the low on increasing volume. Good. So that would mean that there's some supply here, right? And there's some residual supply present. That's right. And we're closing down near the low. Also note that we couldn't rally any higher. Okay. So there's some weakness here. If we were at least able to rally a little bit, that might be a plus. Now, somebody says we're going to fall back down towards support. Try not to make a prediction about things like that. Only that we're seeing supply and that we're likely to come down a little bit. But we don't know where that's going to be, do we? We don't know if it's going to come back down to whatever this level is here, 53 and change. And what do we see on this bar? And I don't mean that kind of in a negative way. It's good to be thinking about, okay, we're probably going to come back down towards support, but try to anticipate rather than, making it a firm kind of commitment. You can say, well, we could come back down to support, we could go higher, or we could hold at a higher level, and here's what it would look like in each of those different scenarios. Okay? So we're seeing a little bit of buying coming in. Yeah, that's right. How big is this buying here, would you say? There's buying that came in. Are we seeing significant? Yeah, not as significant because it's closing pretty much level with the bar before. So kind of more on the bearish side to me. We dip down lower and go pretty low and then can only get back up to yesterday's close. Okay. Yeah, not huge, right. All right, so let's see what happens next. What do we see here? Sellers coming in, right? Yeah, and some decent selling is going on. Here's a way to now kind of solidify in your mind what to look for when you see a bar like this, the bar before. Okay, we said, well, it looks more like supply than it does demand here, right? Even though it closes on the highs and closing level with the bar before. How we know that's the case is on the next day, and the next day tries to rally and does get a little bit above yesterday's high here, but then starts to come down. Right, and winds up closing on the low of its bar and below the bar before. So when you're seeing a bar like this, and especially if you're trading on the intraday, think about what would we anticipate for the next day? Well, we could anticipate we open flat and then come down. And our level, because we have this support level over here, that's kind of our line in the sand. Or if it opens up higher and then starts coming back down through yesterday's high and yesterday's close, this here on this day, then we want to be looking to go short immediately, right? Anywhere in there if we're trading this on the intraday. Let's say that this is the S&Ps and we're trading the E-mini on the intraday. Those are kind of ways to anticipate how to get short on this, okay? Or if somehow we're wrong in our analysis on this, and it starts to rally, and it rallies up above yesterday and then holds yesterday's highs, because it'll likely come back and test that. Or even if it dips down underneath and then rallies back up through, then we want to be long. We want to be buyers. Then we know that some significant buying actually did occur here, and that our analysis was not correct as potential supply. It makes sense to everybody? Kind of anticipate this stuff rather than, and draw up a game plan rather than be firm about, okay, it's going to go do this or it's going to go do that. It'll be a much better, you'll be a much better trader to do that if you do that. Okay? All right, let's see what happens down here. What do you think about this? What is this telling us? Buying is coming in. Right. Sign of strength. Good. It's closed halfway up. Would we be a buyer in here, or would we be a seller, and why? Okay, neutral. That's a position. Neutral, neutral. Buying, we've got a strong background now. Buying, yep. I would be venturing in here at least a little bit. Why do you think I would say that? Why is this bar so significant here? And its volume in the context of where we are. Why is this a potential buy where nothing else, we might have bought here for sure, but because the last point of supply is coming in at the preliminary support level to the left. Yeah, exactly, Mark. Good for you. You're a Wyckoff guy. That's right. Okay, Mark says buyer because the last point of support is coming in at the preliminary supply level to the left. We'll unpack that in a minute. This is Wyckoff, and this is a very, very nice place to take a long position, at least a preliminary position. And let's see why. Okay, let's back up a bit. We have dropped down, and we know that buying came in here, right? We know that because of the extra effort that was put in on some of these bars to the upside here, and also kind of holding in this general area. And then as we dropped down, we didn't draw out any more supply, and instead buying came in, and we see this nice lifting of the price bars up into the same area over here. So for this to happen, we know that there had to be buying over in here. We also know that there's buying here, and that supply didn't just swamp this because we make a new high here. We haven't talked about this yet. But if we look at this, we see this swing high being the biggest rally in this downtrend, at least on this chart, right? We have a rally here, kind of anemic and lackluster. We have a rally here, a lot of pumping and churning, but still, we didn't get lifted off the ground here. Look at this rally compared to all of these, right? So that can only be produced by buying, okay? And so we have some indications of strength in this area here and over in here. As we dip down into this low, you can think back to that 60-minute chart that I showed you earlier. We're coming back down into the same buying area that we saw initially over here. Now, the Wyckoff folks call this preliminary support, not easily seen as it's occurring, but certainly by this point we can deduce that that's what's happening, that we had support come in here, it dips down. There's a little bit of shaking out that goes on. We get a nice rally coming up. And we have the biggest rally in the downtrend. We're rallying up above the high of the prior bar. And now we're back into that same level of support that initially came in on the high volume that gets reversed. Everybody see this? Michael, I'm about to wrap up because I can barely think clearly because I'm feeling kind of crummy, and that Theraflu, the flu medication that I took, is kind of addling my brain here a little bit. All right, any questions about this? So you know, Wyckoff would say the first place you want to take a position would be if you notice this occurring here, and you would take a small position. The next place you want to take a position is right here. As we're coming down, he would call this a secondary test, or as it became known, a last point of support, which is always going to be about the same level as where we can deduce, and we can't see it initially, but we can at this point, where we can see that buying had come in, support for this market had come in. One of the ways that we see that is with the increased volume. And notice the swelling of volume in this whole area here, and compare this general level. You can see this is one of the nice things about the Trade Guider software. We see it in the volume average here. It's substantially higher than any of the average volume down here. And you don't need to look at the average volume. You can just see it in the price bars. If you block this off and you say, okay, this is a block of volume, and I look at this and I compare it to any of the, you know, this whole other elongated block of volume, well, this is much bigger. This is the swelling of the volume that we look for. Okay, so for all of those reasons, we know that this has been an accumulation zone. The odds are good. We don't know for sure. We never know for sure, but the odds are good that this is accumulation. So let's just see what happens with this. I'll stop it here for a second just to highlight that this would be the third level that Wyckoff would be interested in buying. The first being down here. Hard to do this, by the way, unless you're trading intraday, but certainly doable. This would be the second, and now we rally up, and you either can take a position on the break of this level here, which Wyckoff would have done, actually, or as it later became more acceptable to do, or more the norm to do, to wait for a weak reaction, which we're starting to see here, coming back into that supply area. This would be called jumping across the creek being that level, that area of supply in here. And so we could take a position as it's coming back down here. Now, it may not be clear to take a position at this level, right, on this bar. But once again, if we look, remember I was saying in the very first chart that if we're looking for a position and the market gaps open, then we want to be thinking about coming into the market long on this bar here. Okay? It's the same kind of situation that we had initially. And there's the whole market and how this thing rallied up 10 points or so off of the lows here. And there are a couple of other options to get in. So you can see that this is one way to look at bottoms. How is this for everybody? Is this helpful? It's different than just being mechanical about things. Wyckoff was really adamant about, you know, kind of looking at the market as it's unfolding, using your judgment, trying to piece things together, being logical about it. and certainly not being mechanical about things. Does this make sense? Is this helpful? Yeah, well, you know, when we're looking at the trade gutter software, it's really valuable stuff. It's really good stuff. It gives you those signals and things to help you to understand it, to understand what's happening as the bars are unfolding on each individual bar. But Tom will say you need to first pay attention to the background. Forget about what's, don't forget about what's happening on the right edge of the chart, but make sure you can connect it in with the background. And this is a way to do that. This is kind of the way to do that. Oh, you're welcome, Nella. Good to see you, by the way. All right, everybody. Yeah, drink lots of fluids. Yeah, thanks. That's what I'm about to do because I am feeling pretty punky, as they say. And so, I may or may not be in tomorrow. If I'm not there, I apologize for missing tomorrow's live trading. So if I'm sure they'll have somebody else. I'm going to flag Sheena that I might not be in tomorrow at the end here. So that's what I had for everybody, and I'll just ask if there's any last questions about what we covered today, and I'm happy to try to address those. Certainly try to make anything clear that wasn't clear for anyone. You're being kind to me, I can tell, because there's no questions. All right, everybody, listen, thank you so much for coming in to the VSA Club educational event today. It's good to have you all. If I don't see you tomorrow, trade mindfully and trade well, and I'll see you certainly the Tuesday after tomorrow. And have a great rest of the trading week, and I will see you later. Bye-bye, everybody.